Good afternoon, good evening, everybody. What's up? What's up? How's everybody doing out there? Shout out to y'all. How's everybody doing on this Sunday? We're in the new month. It is June 1st, 2025. And we got to reset ourselves and get ready and get back to it. So hopefully y'all are prepared. What's up, Daryl? What's up, Echelon? Shout out to y'all. Make sure y'all smash that like button for me. Share the video, subscribe. Let me get a quick roll call. Y'all shout out where y'all from, city, state, country, region, whatever y'all want to shout out. Go ahead and shout that out so that I can acknowledge where everybody is from. Echelon, you said you're doing pretty good. You're gonna get into the new Circle IPO when it drop. That's new information to me. I think I've been hearing about them wanting to do the IPO, but I mean, we could talk about it. I mean, Echelon, are you going to be investing in the IPOs? Let me know. But how's everybody doing on this June 1st, which is Sunday, June 1st, 2025? What's up, Mud Vein? Shout out to Baton Rouge, Louisiana. Shout out to BR, Louisiana. Shout out to you. I'm going to give it a few more minutes to let some people come in. Y'all let me know in the chat what's in the headlines. Here in a moment, we're going to watch this video. Y'all seen what Jamie Dimon talked about. I'm going to play a little video from Jamie Dimon from JP Morgan. He was talking some heavy talk. And you already know how he does. He likes to flip-flop on crypto, but he pretty much was advocating for countries to buy guns and bullets. So we're going to get into that. What's up, Daryl? LA, California in the building. Shout out to California in the building. Shout out to Cali. The whole entire California. Anything important in the headlines? Anything important in the headlines that I should be covering or talking about? I've been messing with ChatGPT lately. Let me come over here right quick. And I just asked ChatGPT, hey, give me all the latest crypto news dealing with top important crypto legislation, XRP, banks, using crypto, find out everything. And so far, to be honest, the only things that's still relevant and important right now is, you know, as far as legislation, we're still trying to get through the Digital Asset Market Clarity Act. That's pretty much going to introduce lawmakers in the U.S. House, the bills that aims to delineate regulatory responsibilities between the SEC and the CFTC. So we're trying to figure out who's going to get that, what side of crypto. We also got the Genius Act and the Stablecoin Act in the House. The Genius Act is at the Senate, and the Digital Asset Market Clarity Act, I'm not sure what's going on with that. Y'all can let me know. Keep me in touch with that. Echelon, you said most definitely. I think I might go all in, actually. Every dime I got. Hey man, you gonna do what you gonna do. Me personally, I ain't gonna say what I'm personally thinking of, but if that's what you feel like you should do, hey, do it at your own risk. That's why I just had my disclaimer at the beginning of the video. Daryl, you said, I saw Coinbase XRP sold 24/7 futures supposed to be coming in this month. Okay, that's good information, Daryl. If you don't know, a lot of the futures contracts for crypto, they just expired for May. So if you're dealing with any futures contracts in crypto, you need to go ahead and set up your charts for the June contracts. I just did that before I went live. I went and peeked at the June contracts, and they're, you know, the May contracts are over. In crypto, they currently are month to month. I don't know when they're going to do quarterly contracts, like every quarter, every 3 months. I prefer that because I'm new to month-to-month contracts. I never dealt with month-to-month contracts, so they expire real quick. Every 28 to 30 days they expire. So you got to get in there, handle your business, and get out. So that's new to me. But 24/7 trading, that's gonna be lit. Y'all make sure y'all smash that like button. So we got to get through the Digital Asset Market Clarity Act. We need to get through the Genius Act. We need to get through the the Stable Act, dealing with the stable coins. We need to get through all that. It says state legislation. We got at least 40 states that have introduced or enacted crypto regulated legislations in 2025. So the states are getting active with their own crypto legislation. So that's something to look out for. It says at least 40 states. Notable examples include Oregon, South Dakota, Utah, Wyoming. Let me click this right quick. Click on this right quick. Celebrating over 50 years, this website's cryptocurrency digital or virtual currency digital asset 2025 legislation. And let's see the states. That's what I'm looking for. Let's see how many states are pretty much doing their own legislation. Let me read right quick. I'm gonna read this when I get done off this live stream. But we got several states. Let me know if your state ain't even involved. So we got Alabama very active. We got Alaska, America, Samoa. I don't know where that's at. Arizona's active. Arkansas. We got a lot of states. California, Colorado, Connecticut, Delaware, Florida, District of Columbia, Georgia. We got Guam, Hawaii, Illinois, Idaho, Iowa, Kansas, Kentucky, Louisiana, Maine, Maryland, Massachusetts, Michigan, Minnesota, Mississippi, Missouri, Montana, Nebraska, Nevada, New Hampshire, New Jersey, New Mexico, New York. Y'all let me know if one of y'all states aren't really on this list that I'm calling out, because they might be a little bit behind. North Carolina, North Dakota, Ohio, Oklahoma, Oregon, Pennsylvania, Rhode Island, South Carolina, South Dakota, Tennessee, Texas, U.S. Virgin Islands, Utah, Vermont, Virginia, Washington, West Virginia, Wyoming. So these are the list of states that are proposing and setting up their own legislation dealing with digital assets. So that's something to be looking out for if your state is involved. You want to get on your state and local level to keep up with that. And what I'm doing right now, if y'all just joining, I asked pretty much ChatGPT to just give me all the latest information and news dealing with crypto and legislation and all that, and it spit it out to me. So that's what I'm doing right now. I'm just reading different things. We got international development. So if y'all overseas, outside the United States, you got the United Kingdom, the UK. They're doing they're leading the way over there. You got India. So pretty much a lot of places internationally, they're already ahead of the United States. The United States is just now catching up. Let me see. Banks and crypto integration. Regulatory guidance. The FDIC has clarified that banks under its supervision can engage in permissible crypto-related activities without prior approval, which I think we heard about that a while ago, provided that they may manage associated risks appropriately. Similarly, the OCC has affirmed that national banks may offer crypto assets, custody, and execution services. So, banks are pretty much ready. They're getting their regulatory guidance in order. Stablecoin initiative. Major U.S. banks, including JP Morgan, and here in a minute, we're going to go talk about JP Morgan. I'm going to play a video from Jamie Dimon if y'all missed it. Anytime Jamie Dimon speaks, you kind of want to listen to what he's saying, because you kind of got to they be trying to, they be leaving like hidden messages or trying to deter people from doing things. Like he was anti-crypto, anti-Bitcoin, and then he's pro-crypto, pro-Bitcoin. And now he's kind of like, I don't believe in crypto, but have at it. You know what I'm saying? We're going to offer it anyway. So, you know how he been. But JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, they are exploring the creation of consortium-backed stablecoin. This initiative aims to counter competition from fintech firms and established bank regular. We're going to see how far that goes because that's still up in the air. We will see what the Stablecoin Act has to say. Global movements, Asia, China, state-backed think tank is considering adding Bitcoin to its reserves. So we got other countries, other nations thinking about adding Bitcoin and other assets to their reserves. So that's what's going on internationally. So that's from ChatGPT. Just some news. What's up, Lawrence? Shout out to y'all, man. Shout out to y'all. Shout out to you. Let's come over here. Let's read off some prices. And then we're going to come look and see what Jamie Dimon had to say. And then we're going to do some technical analysis. So if you're not interested in technical analysis, I understand this ain't for everybody. This is a technical analysis channel. We cover some news and some headlines. Sometimes we have fun, but we mainly focus on TA. So don't come in my live stream talking about, hey, this is boring and whatnot. No, you just tune out, subscribe, and tune out. I am your go-to when it comes to technical analysis, though. You better believe that. So we got XRP currently trading at 217 over the weekend. We had a pullback crash. It's all anticipated. I'm gonna go into the charts here later. We're gonna get into what happened and what I see going forward in price. You should know price is algorithmic. These things repeat over and over again. So that's the perspective I teach. Y'all should know that if y'all been subscribed, and if you're new, that's my philosophy. Prices are algorithmic. They can be timed and they're coded. And what we do is we get in sync with that. We got XLM trading at 26 cents. Currently retracing back down. We got XDC at 6 cents. We got HBAR at 16 cents. Bitcoin looking like it's the only asset in ZBEC. But Bitcoin up 105,000. It looks to continue to go higher. Be on the lookout for the continuation higher. So be paying attention. Ethereum still kind of playing around 2,500. Algo 19 cents. ZBEC is up. It's at 0.006. Not even a penny, but it's at 0.006, but it's up. So shout out to y'all if y'all been there. Let's look at some stocks. This is like a list of my top stocks that I look at. We got Apple coming down, retracing. Apple is at $200, $285 is retracing right now. Nvidia looking like it wants to break out. Nvidia looking like it wants to break out is currently at $135. Microsoft looking like it wants to break out. It's currently up to $460. So Microsoft doing good. Amazon just came off a retracement. It's currently trading at $205. Meta currently trading at $647. Also looking like it wants to break out. So be on the lookout for certain stocks. If y'all hold stocks or into stocks, they're going to be looking to break out. Even Tesla up to $346. Tesla. Alphabet or Google, $171. And then Pfizer down in the dumps. They're down in the dumps right now. It's kind of falling out the bed. So Pfizer had a strong beginning to the decade during 2020. So I'm sure, people probably taking profits from Pfizer. And y'all let me know in the chat if y'all are interested in any other stocks and that I will review. So with that being said, let's come over here. Let's get to Jamie Dimon. Let's come over here to Jamie Dimon. He was at some event, and I've seen some headlines of him talking about, the United States need to buy guns and bullets. A lot of people thought that was like fake headlines, but I actually found the clip and the video. He was at some type of event, and let's see what he had to say about the status in this, the current status of society and mankind and the economy. Let's go ahead and see what he has to say.
I mean, that's a perfect place to start this conversation, actually, especially here at the Reagan Museum. It's an honor and a privilege to be sitting down with you, Jamie. There's a lot to get to in this conversation. So I figured we'd start small, and then I would ask you a really basic, straightforward question, and that is, what's your biggest worry right now?
Yeah. So first of all, thrilled to be here. I'm glad you're doing this. I hope we may join the defense forum you guys do every year too. And the way I look at it, the big picture is the tectonic plates are shifting. We got to get our heads wrapped around that. Those tectonic plates are the geopolitics with these terrible wars, terrible proxy terrorist activity around the world, North Korea, the potential proliferation of nuclear weapons over time, which is the greatest threat to mankind. And then you have another.
See, already off top, like he's not talking like a CEO, which we already know JP Morgan. If you don't know, JP Morgan helped create the Federal Reserve in the United States. The Federal Reserve is the central bank of the United States. They are privately owned. They're not a public nor federal agency. It is a privately owned institution. And off the top of this conversation, he's already starting off with geopolitical news. He's not talking like a CEO of a bank, or he's not talking from that perspective. He's talking about global issues, which, JP Morgan is heavily involved in global politics, but let's just follow what he's speaking on. Let's go ahead.
The other tectonic shift is the global economy. So the global military umbrella of America, and then the global economy, of which trade is a part. The other parts are do people want to partner with you? Do you have your alliances? Do you have investment agreements? And all those various things, and they're changing. And then our debt, which you just heard a bunch of folks talk about eloquently, it's large, and it's not just us. We added $10 trillion in 5 years. We have, you had Reagan up there talking about deficits. The debt to GDP was 35%, and the deficit was 3.5%. Today, it's 100% debt to GDP net, and a deficit of almost 7%, highest peacetime ever. And when the CBO does their numbers, which I don't really trust, by the way, they should do the stress test. Like, what happens if we go into a recession? That 7% will be 10%. And so we have problems, and we got to deal with them. And then the biggest one, underlying both that, is the enemy within. I'm not as worried about China. China is a potential adversary. They're doing a lot of things well. They have a lot of problems. What I really worry about is us. Can we get our own act together, our own values, our own capability, our own management? What you heard today on stage was the amount of mismanagement is extraordinary, by state, by city, for pensions, and that stuff is going to kill us. And I always get asked this question: are we going to be the reserve currency? And no, if we are not the preeminent military and the preeminent economy in 40 years, we will not be the reserve currency.
So what y'all think about that from Jamie Dimon? What he's saying, like, if we don't, he's leading with military force. That's how he's thinking. Like, man, if we ain't the most dominant military in the world in the next 40 years, then no, we will lose that world reserve currency status. And he's almost kind of like, do y'all think it's like he's pre-shadowing the fall of the dollar as far as it not being the reserve currency of the world? What do y'all think? Y'all let me know in the chat. What's up, TG 1974? If y'all just joined, make sure y'all smash that like button. Subscribe to the channel. Y'all let me know y'all feedback. If y'all don't know, this is a big wig. He's just as big as the president, in my honest opinion. Jamie Dimon is bigger than Donald Trump, from my perspective, in my worldview. Donald Trump is the president of the United States, but this guy right here, we talking about elite bankers. You know what I'm saying? Elite bankers of one of the biggest institutions in the world. So what he says pretty much sticks in the universe, in the atmosphere. So he holds weight in his conversation. So let's continue.
That's a fact. Just read history. Now I think we will be. Warren Buffett here would tell you we're enormously resilient. I agree with that. I think this time is different. This time we have to get our act together, and we have to do it very quickly.
That was a big answer. There's a lot to dig into there. So the takeaway is geopolitics. I have a great
quote for the first thing too. Someone said the government spends like a drunken sailor, and someone else said no, a drunken sailor spends his own money. I forgot who said that one.
So you're talking about a total realignment of the global order. We're talking about a restructuring and simultaneous reassertion of American hegemony in the middle of all this. Huge gamble afoot right now with some of the policies that are coming out and how they're taking shape. What does it take for it to pay off? Just a list of stuff. Okay, we have to acknowledge the grievances that have put us in this position to start with.
and they're real, okay? Immigration, what the hell were we doing? You know, the bottom 20% of our population, you know, their wages didn't go up for 20 years. They're dying 7 years younger. You know, when administrations, you know, the Biden administration is giving all this money to EVs and cars and wasting a lot of money on green stuff, which isn't going to work, and all that. Do you think people in rural cities, do you think people in inner cities thought they were getting anything? Do you think that those people think that the American government is fair and competent and that this was in their best interest? Their schools don't work. They're not getting the skills they need. And you heard that.
Man, you think Jamie Dimon, do you think Jamie Dimon really give a damn about the bottom 20% of Americans? Come on now, like, which I ain't gonna, you know, we should know he's putting on, but these people are psychotic to me. He don't give a damn about the bottom 20% of Americans. At this point in his life and in his position, he's worried about power. It ain't even money no more. It's about power. So he likes to pull. He's pulling on the heartstrings of the poor right now. So let's continue.
Just now. So we got to acknowledge these. And I also call it blue tape. Because, you know, Republicans, you generally don't like red tape. You understand the devastation of it. But, you know, most Democrats, they love it. They want more of it. And they want to make it so confusing you can't even meet the rules, so you get punished and fined afterwards. And so, you know, and then you have in permitting, and, you know, I call the government the Leviathan that's too weak, can't get stuff done, and too strong. It imposes things on the American public that they're getting sick of. And they should be getting sick of it, and acknowledge that. Celebrate our virtues: freedom of speech, freedom of religion, freedom of enterprise, equal opportunity, family, God, country. You know, and you can acknowledge the flaws that we have, which are extraordinary, what we did to the black population for years. Don't denigrate the great things of this country, because those are two different things. If you have in any team, if you put a team on the field and the team's torn apart, they're going to lose. And that's kind of us right now. You know, we're not a team anymore, and we don't collaborate, we don't talk that much to each other. Deal with our policies, and this is the enemy within. We've got to fix our permitting, our regulations, our immigration, our taxation, which I think they're on their way. We have to fix our inner city schools, our healthcare system. If we fix those things, we can grow 3% a year, and all these problems will disappear. But the most important is maintain those military alliances, spend whatever you got to spend to have the strongest military in the world, and I think I'm hoping the goal of the Trump administration is this: keep the Western military alliances together. If the world cannot rely on America's military umbrella, we may have paid too much, we have not done it. If the world can't rely on it, they are going to be looking for alternatives. There's only one other real alternative out there, or getting a nuclear weapon. And then maintain and expand and grow our economic alliances. We have tons of treaties, economic treaties. We do a terrible job in development finance, but, you know, expand that. The goal, like, you know,
I overheard him. I stepped away for a minute, but I overheard him say, spend what you got to spend for the military. So that means, you know, unlimited spending, the shit we've been seeing for the past 20 years, plus unlimited spending. So it's like, we ain't going to stop that, huh? You know, we got to have constant war. That's what he pretty much saying. Like, we need to stay in constant war for the next 40 to 100 years to remain dominant in the world, which, you know, the world ain't got to be like that. The world ain't got to be like that. Why the world got to be like that? You know what I'm saying? It's just insane. You know, people got to die. People got to get murdered. People got to send their sons off to war. You know, it just got to continue in order to keep supremacy going. So let's continue.
Beating up Europe, the goal should be help Europe get stronger. We know what their problems are. Keep them closer. You know, do the trade agreements, the investment agreements. They'll keep the Western world together. Those two things will keep the world safe and free for democracy. If we don't do those things, the world is not safe and free for democracy. And so that's what we have to do. And people know what they are. We've all written about it. We just have failed to actually do it.
So tariffs are obviously in the mix right now, but we also know that a number of countries, the game plan here is to get to trade deals. How do you think that shakes out? Do you think this ultimately, maybe looking to the end of this year or the end of this term for this president, that we actually end up in closer alliances with some of our trading partners than we had?
You know, we did a little bit of too much everything everywhere all at once, so it's hard to step back from that and finish. I think the best we can hope for, and we should hope for, and I think I see them doing this, which is to finish, you know, maybe there's 15 important ones, finish them. There'll be agreements in principle. They will not be trade agreements, but agreements in principle, at least give you a framework, to get things done, and hopefully they could do some in July, August, September, October, November. I would engage with China. I just got back from China last week. They're not scared, folks. This notion they're going to come bow to America, I wouldn't count on that. And when they have a problem, they put 100,000 engineers on it, and they've been preparing for this for years. So, but we should engage. And when we do these trade agreements, the most important part is not, TV, making TVs or making furniture or T-shirts or sneakers, stuff like that. It should be the stuff that relates to national security. Okay, that's rare earths, medical, pharmaceutical ingredients, penicillin, and it's things which relate.
Did he say pharmaceutical ingredients? Isn't that same stuff coming across the border through Mexico? Isn't that, why are we getting that stuff from China that comes through the border to Mexico into the United States? That's what he advocating for. So that's why I watch Jamie Dimon, because it's going to be a roller coaster. It's going to be some highs. There's going to be some low points. There's going to be some truth, and there's going to be some lies. And it's going to be some things that's in plain sight, and there's going to be some things that are hidden. That's why you watch people like this, because this man is a master at he's a master at different things. You got to watch people like this.
Closely relate to national security, maybe AI, narrowly done, the chips you're here reading about, and then things which I think are very unfair trade, where they might be using merciless behavior to dominate global industries. That is the stuff of war, by the way. If you read all history, that is what started it. And that might be cars, batteries, solar panels, stuff like that. That we should do with their allies. It's not going to do America a great job if we come and hold it off, but we don't stop them, beggaring thy neighbor or beggaring Europe. So we have to be we should be doing some of that with their allies.
What you're getting at is
and our allies need our help, by the way. They know they need to do some of these things, and some of them won't be able to do it without us.
There's this expanding intersection between industrial policy in this country and national security, which sort of gets at what you're talking about with some of these different industries. And it's spanning the last couple of administrations. Everybody devils in the details in terms of how the policies shake out across administrations. But I guess to that point, do we need to rethink what constitutes national security?
I wouldn't rethink it. We know what constitutes national security. We need, I was saying we shouldn't be stockpiling Bitcoin. We should be stockpiling guns, bullets, tanks, planes, drones, rare earth.
So did y'all just hear that? He said we should not be stockpiling Bitcoin. We should be stockpiling guns, bullets. He keeps staying on this war narrative. And like somebody said in the comments, he's kind of foreshadowing what he expects. He's a bigwig. Like I said, if y'all just joining, I feel like he... to me, banks, the banking institutions, they sit above government. So governments, politicians get their orders from these CEOs from these banking institutions, and then they lobby and whatnot, and they get their shit done through lobbying through these corrupt politicians. And so that's why the banking foundation sits on top of government. So don't be distracted by Donald Trump and all that. Yeah, Donald Trump got power in his position as president, but in my honest opinion, he has he doesn't have as much power as somebody like Jamie Dimon. He does, but you better not go against what the foundation that sits above you. Or, you don't go against what they're trying to go against, or you already know what happens. You've seen it in the past in history. But he keeps staying on this war narrative. He's pushing that, and he's saying, man, we should not be stockpiling. So pretty much Trump and his regime, they want to stockpile crypto and etc. And Jamie Dimon is advocating for we stockpile bullets, guns, weapons, drones, weapons of mass destruction, pretty much. So that's not a good sign, Jamie Dimon. That's not a good sign. I don't like to hear that. We need prosperity. We need peace. And nothing up here he's talking about is peaceful. Nothing he's up here speaking about is peaceful at all. He wants to see bloodshed, apparently. So we're gonna have to question you, Jamie Dimon, on, we're gonna have to look at you sideways. Like, what are you into? You don't, Jamie Dimon, you're not going to bust your gun. You're not going to go to war. You're not going to send your kids to war. You know what I'm saying? You know what I'm saying? You're not going to do none of that. So what are we doing?
We know what we need to do. This is not a mystery.
Did you say stockpiling Bitcoin?
I said we shouldn't be stockpiling Bitcoin.
Oh, it shouldn't be. Okay.
We should be stockpiling bullets.
Okay.
Like, the military guys tell you that, if there's a war in the South China Sea, we have missiles for 7 days.
He said it twice. I'm going to rewind it back one more time. I'm going to just rewind that back one more time. But, he said that twice. We need bullets. That's how he said it. We need bullets. But Jamie, you're not going to shoot none of those guns. You're not going to you're not going to pull the trigger. So why are you advocating for this? This is crazy.
Guns, bullets, tanks, planes, drones.
What you're getting at is
and our allies need our help, by the way. They know they need to do some of these things, and some won't be able to do it without us.
There's this expanding intersection between industrial policy in this country and national security, which sort of gets at what you're talking about with some of these different industries. And it's spanning the last couple of administrations. Everybody devils in the details in terms of how the policies shake out across administrations. But I guess to that point, do we need to rethink what constitutes national security?
I wouldn't rethink it. We know what constitutes national security. We need, I was saying we shouldn't be stockpiling Bitcoin. We should be stockpiling guns, bullets, tanks, planes, drones, rare earths. We know what we need to do. This is not a mystery.
Did you say stockpiling Bitcoin?
I said we shouldn't be stockpiling Bitcoin.
Oh, it shouldn't be. Okay.
We should be stockpiling bullets.
Okay.
Like, the military guys tell you that, if there's a war in the South China Sea, we have missiles for 7 days. Okay, come on. I mean, we can't say that with a straight face and think that's okay. So we know what to do. We just got to now go about doing it. Get the people together, roll up our sleeves, have the debates, do some privately, do some publicly. JB Moore is going to publish we call it the Defense Action Form, something that shows we don't leave excess surplus production capability for missiles or bullets or bombs. We don't have a military that can flexibly move money from, you see how quickly the software and hardware they need changes. So the military can't have a 30-year program. They've got to be able to cancel that drone program, build up that drone program, hire this person to do the software. We have to allow them to do multi-year budgeting. We essentially don't. The military tells me it costs them $50 billion a year, and we have to spend more.
So Jamie Dimon, run for president. You know what I'm saying? If you see all this, you might as well be a military general, Jamie Dimon. Run for president. Why won't you do this, Jamie Dimon? No. He has an opinion. He wants to see all this done, but he's not going to get in the field himself. He doesn't want to go through that. He wants to sit at the top of the totem pole as an executive of the largest bank in the United States. That's what he wants to do. Let's continue.
I mean, so I can go on and on and on. We're going to lay out all these things and hopefully help, just get going there. I think they know, but I think all of us in this room know about this. It's just now we have to do it.
When you talk about spending more, a lot of focus on the big beautiful
I'll
bill.
add one of the things that is important. I know, Jason, you've done, I don't know if he's in the room, has done a great job getting this one big bill through. The American people, okay, they know that when they see money going to Washington, D.C., and you could be a Democrat or Republican, my most liberal elite Democrats, I always ask them, do you personally believe that sending another $1 trillion down to D.C. is going to make the country better? Do you think it's going to be used for good stuff, or is it just going to go to the interest groups? But my criticism, and they don't, by the way, almost no one believes that, my criticism is there are 13,000 lobbying groups in D.C., there's only like 10 or 12 bank ones, by the way. People think banks are big. We're not actually that big. Now you have private equities bigger or stuff. And yes, we absolutely should be, I don't know if Gary's here, taxing carried interest and all that. And nor should we allow much SALT deductions, even though it costs me a lot of money. But
did the CEO of the biggest bank in the United States say banks aren't that big? Did he just say that? Did he just say that banks aren't that big? The biggest bank, from the CEO of the biggest bank in the world. He just said that, man. That's crazy.
But those groups are so selfish. Cotton, corn, sugar. And when they go to D.C., they're fighting for interest groups, unions, teachers, and it's really damaging our country. So you need leadership like a Ronald Reagan type. They have to explain to the American public why you have to sacrifice, your own personal interest. And if you do, by the way, and we can grow at 3%, you'll still be far better off. So, to me, it's okay to sacrifice a little bit and to get all these groups, and all these groups, a lot of CEOs, they don't even know what their people are asking for in DC. And their people are going to see people like Gary Cohn every day begging, for a little special thing here, a special thing here, why this should not be discontinued. The government should get rid of all that crap. The American business community doesn't need any special tax breaks at all. They should have rules of the road, good regulations, and let the world compete. And so there's a lot to do. We know what to do. It has been done before. It's just going to be hard.
So how do you see, I guess, what is your takeaway then on this tax bill as it makes its way through Congress right now? Because on the one hand, looks like it increases the debt load. On the other hand, there are stimulative aspects to it as well.
Yeah, so our debt to GDP is 100%. It's going to grow to about 115% over the next 10 years or something like that. Then it's a hockey stick. And the hockey stick is Medicare and Medicaid, maybe a little bit of Social Security. So we see that train coming down the tracks. We know how bad it is. But my view is get the tax bill done. You heard the folks on stage, certainty, business growth, and then focus on other things that grow the economy, permitting, red tape reform, all stuff like that, education, skills, which are all doable. There are a lot of places that do quite a good job at this. Read Our Towns. Jim Fallows writes for Atlantic. He's got this book, Our Towns. You go to Omaha and St. Louis and Bozeman and Austin, and they're innovating, they're growing, they're collaborating. Small D works. It's big D that's failed.
Pause, Jamie. Pause, Jamie. He said Big D fails. Pause, Jamie. But anyway, that's Jamie Dimon. If y'all want to go watch that, go to YouTube, watch the rest of it. It's The Greatest Threat to Mankind and JP Morgan Chase. I encourage y'all to go watch it. Listen to him whenever you like, working out or cooking, pay attention, listen to what he got to say, treat it like a little podcast. But we just get some insights from Jamie Dimon. I want to move forward in the live stream. I don't want to keep y'all all day. If y'all just joining or you're brand new to the channel, you're in the back of the weeds, subscribe to the channel, hit that like button, share the video. And let's come back over here to the charts right quick. Let's come on back over to the charts. Let's take a look at the economic calendar. So if you don't know, we just entered June. Y'all should all know that. We have began a new month of 2025. So this is the last month of the second quarter. So we're currently in Q2, quarter 2 of the year. We are in the last month, which is June. Once June ends, we will enter third quarter 2025, and it is going fast already. It feels like it was just January. So much has happened so far this year. You know what I'm saying? So let's go ahead and wrap up this quarter. From what I'm seeing right now, well, we're going to look at it here in a minute. I'm doing a fresh analysis. We're going to look at these things. We're going to break it down. So we have entered June. We are in the first week of June. We have 1, 2, 3, 4 full weeks in June. And then there's an extra week in the markets, not in real life, in the real world, but in the markets, there will be a 5th week in the market. So we're in the first week, Sunday, June 1st, 2025. We have a busy week coming up. So whenever you see a week that has non-farm payroll, the markets are algorithmic. So during these times of the day where you see high impact news have these red folders. I'm using forexfactory.com. So this is where we follow the economic calendar, where we have economic news releases where it can impact the markets. So anytime we see these high impact news events and you're looking to be a trader, we don't react to after the fact. We don't, like, for example, whenever we see interest rates announcements, we don't wait and react. No, we're in real time watching price. So again, this is the segment of the live stream. If you're not into technical analysis, just go ahead and, either pay attention or, exit to the left. So this is for my people that want to learn technical analysis and want a deep insight of price action, because I am a pure price action trader. I'm a trader first. That's my perspective. So it can be dry. And again, this is dry. This is boring. This ain't for everybody. This is for people who want to have a leg up on everybody else. So anything in life that takes time and study or whatnot, It's not going to be easy. It might be dry and boring. So that's how you get ahead. Dry and boring get you to the money. That's all I'm going to say. Dry and boring get you to where the money is. So sitting there listening to Jamie Dimon, that's not necessarily getting you to the money, but that's part of it. That's part of analysis. That's part of my analysis. We're watching the largest CEO of the largest bank in America. So that's a big deal. So looking at the economic calendar, knowing when these news releases release. So tomorrow, Monday, June 2nd, at 12 o'clock p.m., we got Federal Chairman Jerome Powell. So you already know Jerome Powell is another big wig. He is the chairman of the Federal Reserve. So anytime he speaks, the markets become volatile. He has this effect where it's like, if you're not a trader, you might not understand where I'm coming from. But whenever you see like Jerome Powell, the president of the United States, speaking, non-farm payroll, these effects and these people, when they speak in the markets, it's almost like being in the Matrix when the agents are coming. Y'all should know the movie The Matrix. And anytime the agents are entering the little portal or the wormhole to come into the Matrix, everything becomes distorted. This is not a game. I'm not lying about this. You got to be locked in. You got to be locked in with what I do to understand what I'm talking about. You have to have experience. You have to see it for yourself. All of these news events can be predetermined. We can determine what's going to come ahead of time. So we can anticipate at 12 o'clock tomorrow that the markets will be distorted. The markets will be choppy, volatile, and whatnot, because they let you know right here in your face. This isn't after the fact. We're not waiting after the fact. We're waiting in real time. So, and then sometimes they inject liquidity. So for us traders, we thrive on liquidity injections. So we anticipate, if you're a trader, so if you're a long-term investor, this doesn't really pertain to you. But if you're somebody who's a trader, we love volatility because that pays us out. So whenever they bring volatility to the market, they inject liquidity into the market. We smart money traders, we get in sync with that liquidity injection, and we ride the coattails of smart money. That's exactly what we do. So you have to be in this game. You have to study this to know what I'm talking about. But other than that, we got a busy week coming up. A lot of high impact news, PMI data, unemployment claims, non-farm payroll. If you're a trader, if you're somebody who likes to trade, be out of the market by Wednesday. That is a cheat code. That is a hack. So if you're in here trading, a lot of y'all probably not trading. But if you are somebody who likes to be in these markets and trade them, be out the market by the AM session Wednesday. After that, you're going to be stranded on the island by yourself. The train leaves Wednesday by the AM session. After Wednesday, you're on your own. Like, it's almost like a sundown town. So whenever the sun starts to go down and you're not out of town at a certain point, you're on your goddamn own. So that's what I'm trying to say. After this week, let's go ahead and forecast into the second week of June. As you can see, we have a high impact news week in midweek and later in the week. But next week, we can expect more volatility to come to the market. And then let's go ahead and sneak peek out into the third week of June. In the third week of June, we got a federal funds rate. So they're going to do an interest rate announcement Wednesday, June 18th, the third week of the month. Y'all let me know in the chat. Do y'all think they're going to continue to pause, or are they going to lower the interest rates? They're probably going to continue to do what they've been doing, which was pausing the interest rate. So I'm going to bet that they pause it. Anything else can happen. That's a big deal if whatever they do. And then that Thursday is a bank holiday. June 19th is Juneteenth holiday. I believe that's the day where the slaves celebrated their freedom on June 19th. So that's a bank holiday. So on this week right here, we're going to go ahead and call it a week after Wednesday. We're going to call it a week after Wednesday. Maybe Friday, you might have some opportunities in there. But if I was trading this week, I'll trade Monday, Tuesday, Wednesday, be done for the week. That's it. See how I have protocols and I can predetermine what's going to happen? So that's that. If y'all just joining the live stream, man, make sure y'all smash that like button. So with that being said, the first thing I want to look at is right here. Let's come to take a look at the interest rates. The Treasury market. Y'all all should know. If you don't know, we're going to start. Everything flows through. Everything, the whole entire markets, the whole entire system runs on debt. So that's where we need to start at. We need to start in the Treasury Bonds market. We need to start in the Treasury market. The United States of America is broke. So what do they have to do? They have to issue debt. Who do they issue debt to? A lender of last resort, which is the Federal Reserve. That's why we're looking at Jamie Dimon. We're talking about Jerome Powell. They lend out cash. So the money, some of y'all might not know this. Some of y'all do. The money that's printed, the money that's in your bank account, those are debt notes. That's why cash loses its value in a savings account. If you're trying to stack cash and save money, you're going to be inflated away by inflation because the United States is going to continue to print debt because they are broke. They are bankrupted. And that's why Jamie Dimon says, if you just joined it, Jamie Dimon, I watched a video from Jamie Dimon. He was pretty much saying, for our military, spend as much as you need because we need guns and bullets. So that means the United States government has unlimited spending on military, which that can become in the billions and trillions. So it gets crazy with the United States military. They spend a whole lot on military because we won't, according to him, we won't be in power for the next 40 years if we don't dominate militarily. So with that being said, for you, somebody who goes to work hard, stack fiat, if you're just saving in cash money, you're going to be inflated away because our government has no intentions on cutting back spending. Don't let them lie to you. They're going to continue to spend. That's not their problem. They're not even worried about paying it back. So, because they got other obligations because they want to remain superior in the world. So whenever we come to the markets and want to invest, you want to start in the Treasury market. So we start with the T-bonds, the 30-year bond from the United States government. If you're in your own country, all nations do the same thing. But I'm in the United States of America, and the United States has the world reserve currency status. So that holds weight over every nation until otherwise. So according to Jamie Dimon, if we don't remain military strong and continue to spend for the next 40 years, then no, the United States will not have the world reserve currency status. So he's pretty much saying, bankrupt your citizens, to hell with future generations, continue to spend if y'all want to remain dominant in the world. That's what he's saying. That's how I interpret it. So whenever we think as investors or traders or whatnot, we want to start in the Treasury market. We want to come over here to the T-bonds. The 30-year, I got the 10-year, and I got the 5-year pulled up. The 30-year is on the left. The 30-year is the long-term Treasury bond, and we got the 10-year. I really don't keep up with the 5-year, but I got it up here anyway. So if we look over here, all these charts are set on the monthly time frame. The monthly time frame is a long-term time frame, a long-term chart. So the Treasury bonds have been consolidating for several years now. It's been several years that it's just been consolidating. So whenever there's consolidating, it's not showing a clear indication on direction. So while these things are continue to consolidate higher and lower, they're continuing to print money, etc. So whenever the Treasury bonds, if you don't know, from a technical analysis perspective, whenever the bonds goes lower, or the treasuries or the debt, whenever they go lower, they're selling off. That means the United States dollar and the interest rates go higher. That's hopefully y'all understand it. Whenever they sell off, the dollar gains strength. Whenever these rally, for example, over here on the left, whenever they rally and go higher, the dollar loses value. The dollar goes lower. So whenever the treasuries go higher, that's because they are printing currency. They're printing money. So whenever the treasury bonds go higher, the Federal Reserve, central banks are buying up these notes, and the dollar gets weaker because they're printing. The money printers are on. So it's easy to understand what it looks like in the charts. So, for example, whenever the treasury bonds are going lower, They have paused the printing. Like y'all see, they have paused the printing and they're adjusting interest rates on the fly. So weaker treasuries equals stronger currency. And that's what we've been seeing from the dollar. But in the past few years, during the pandemic era, from 2020, the beginning of the pandemic, it was selling off. But from about 2022 to currently 2025, it's just been sideways consolidating right here. And that brings distortion in the market. So as this consolidates, that's where you see the pausing of the interest rates from the Federal Reserve, the chairman. They're just pausing it, holding it, and by them doing that, it's just consolidating sideways. So right now, it's a hard read right now on direction. I'm going to continue to say it's going to keep going lower because these markets are tradable too. They trade the Treasury markets, like in the futures market. If you don't know, I teach futures, I trade futures, and you can come in here and trade the Treasury Bonds, and there's a lot of liquidity resting below the market. Let me zoom out right quick on the 30-year. Zoom out. And they use this market right here. They use this tool right here to control the entire financial system. So this whole market right here, the Treasury market, literally, it literally is dictating people's lives to the point of life and death. I don't know how deeply y'all have thought about this, but if you go down the rabbit hole far enough, you will start to understand that, damn, they're using this one tool, this one mechanism to either allow people to thrive in society or be homeless. Some people, it's crazy. It's a crazy system we living under. This is slavery 2.0. Not comparing it to slavery. It's slavery 2.0 because it's financial slavery. And if you don't know this, you don't unlock the secret. So this is the secret. This is the game to the markets. If y'all just joining, man, smash that like button. So right now, if we just zoom out to the 3-month time frame, you can see currently the Treasury market since about 2020, which was the pandemic, sold off. As that sold off, we know during that time frame they raised the interest rates, right? Correct. Anytime the Treasury sell off, the dollar gains strength because they're raising the interest rate. So now let's look at the dollar. Let's come over here and look at the dollar, the Dixie. And we need to go back roughly about 2020 right here. So about 2020, during that time frame, the dollar gained strength. You see that? Do you see that? So, like I just said, if y'all caught that, you might have to go back and watch the live stream, rewatch the video, whatever you got to do. Whenever the Treasury market sells off, this is the cheat code, this is a lock, the dollar and the interest rates go higher. So during that sell-off in the Treasury markets, dollar gains strength. You can see that that trend going higher, that expansion higher right there. And we created a peak around 2022, and then we went in consolidation, just like we're consolidating in the Treasury market right there. And the Treasury market sold off real hard during that time frame, real hard. And dollars consolidating. So we're at a crossroad right now. Eventually, these markets are going to have to figure out what direction they want to go in. Is the Treasury market want to reverse and go higher, or is it want to continue to go lower? Whenever that happens, that's going to determine what the United States dollar is going to do. If you don't know, the dollar is a fiat currency. There's nothing backing it. So it's all debt based. It's all debt based. Y'all are going to work earning cash, fiat money, which is all debt. It's not even real. And when you think about it, for some people who work hard, laborious jobs, that shit will make you go, it'll make you angry. That shit will make you angry. That shit will make you it'll make you sad. It might depress you, whatever. It might do something to you. It made me angry. Like, man, fuck. You know what I'm saying? Like, we're going to work. We're working wage jobs for some shit that ain't even real. And they got us bonded by debt, student loans, car payments. And we're working for some shit that don't have no value. What kind of shit is this? Once you wake up, you know what I'm saying? Once you wake up, you might have that anger in you. But I'm here to reverse that and show you the game. And it's the cheat code And we don't have to wait for Jerome Powell in the Federal Reserve to come out and say, hey, this is what's going on. No, you got to have a framework and a foundation on technical analysis, and you can see how this is operating. So right now the dollar is consolidating. So in this period right now, during the dollar consolidating, there's uncertainty in the currency in this consolidation right here, because it's not a clear direction on where it wants to go. Does it want to go lower? If the dollar goes lower, that's a risk on environment for commodities, assets. That means commodities and assets will go higher. That's a risk on environment. So when the dollar goes higher, that's a risk off environment. So during this time frame from 2020, when the dollar was going higher, that's when that Ripple SEC case happened around that time, and everything fell out the bed. Everything was being manipulated. But also when the currency is consolidating, markets become very volatile because there's uncertainty. So other markets might take off, like gold, like Bitcoin. Some markets will take off. Certain stocks will take off because people don't want to hold cash. There's uncertainty in cash, fiat. So they want to jump into more volatile positions in other markets. So they start investing into crypto, stocks. Some people might invest in treasuries or alternative assets. So that's what's going on out here. Hopefully y'all press 1 if y'all understand that, man. Press 1 if y'all understand where I'm coming from. So since right now we're in the consolidation, and if I just zoom out, let me zoom out right quick to the 6 month on the dollar. As I zoom out to the 6 month on the dollar, we currently just retraced down into this fair value gap on the 6 month time frame. A fair value gap is a discounted void in price where it's an algorithmic reference point. If you don't know, it's an algorithmic reference point that I'm about to highlight right here in the orange. This is a 6 month time frame. On a 6 month time frame, it only takes 2 candles to complete a year cycle. So put that in your notes. On a 6 month time frame, it takes 2 candles to complete a 1 year cycle. Lenny, you said, what do you think it will happen with the Japan sells off in the U.S. debt they hold? Hell, they could sell it off, but is somebody willing to buy it back? I don't, Lenny, I understand the whole Japan narrative. I get it. Japan holds a lot of United States debt. Japan damn near keeps their interest rates at 0 for whatever reason. And if they decide to sell it off, I mean, shit, you know, I don't have all the answers. What I like to do is I like to keep it, you know, I know how to read charts. I know how to read price. I understand the narrative. And we can't predict what the next event will be. So I try not to predict what the next event will be. So if you say if they sell it off, of course, if they sell off the United States debt and they hold a lot of the United States debt, we're going to see that Treasury market, you know, pretty much do some crazy shit. Now, what's the solution? I don't know. Does that happen? I don't know. I'm going to tell you this. If anything happens, it's already happening ahead of. If anything happens, it's already happening ahead of in the market before the announcement. That's what I'm trained to do. That's what I'm trained to know. So anything that's going to happen, it already happened in the market ahead of time. Anything being reported after that is all a reaction. It's all if they want to use it as content or scare tactics. It's all a reaction after the point. So if it's going to happen, it's already happening in price in the markets. So hopefully that makes sense, Lenny. I don't have the answers. I'm not the smartest man in the room. Some of y'all are smarter than me. So when it comes to certain things, what I like to do is I know how to analyze price. I understand geopolitical narratives. I understand certain things. I don't know it all, though. I ain't trying to know it all. I don't want to know it all. But I understand the Japan narrative. Let's see what happens. That's a narrative. Here we got Jamie Dimon. If you're just tuning in, I played the video from Jamie Dimon. Jamie Dimon is pushing war. So in the markets, if you're caught up in the markets, there's always a war scenario. You don't know when war is going to pop off. So that's always a scenario that you always have to include in your cards. And I don't try to there was a time where I used to be like, man, we're going to war, etc. But I stopped doing that because you can't control the outcome or the future. We don't know what's going to happen. We didn't know the pandemic was going to happen, because when the pandemic happened, that impacted the markets severely. So what else happens? When the Ukraine-Russia war popped off, that impacted the markets. So you don't know what's going to happen. I can't forecast everything when it comes to the unseen. But this is a 6-month time frame for the dollar. So what I'm waiting for the dollar is, right now it's selling off. That's a indication that that's a risk on environment. So during the sell-off, you've seen the stock market go crazy. You've seen Bitcoin go crazy. And what I'm doing is I'm zooming out, but I'm looking at the current candle. We reached up into a premium level up here, and we rejected it. And the dollar has been showing weakness ever since. And we have 29 days to complete this candle right here on the 6-month time frame. So where do we close this candle in the next 29 days? That's going to be significant. I want to see it come down a little bit lower. I want to see it reach for this order block right here, this down close candle, the opening price. If it does that, expect higher prices in other markets. Okay. So whenever this candle closes in the second half of the year, where do we go as far as completing the year of 2025 for the dollar? Do we want to continue to go lower, or do we want to kind of use this as a support level and bounce back up and go higher? These things take a long time. If y'all don't know, these things play out very long. So let's see what happens. So right now it's a risk on environment. So whenever the dollar goes lower, that's a risk on environment. Whenever the dollar goes higher, that's a risk off environment. So understand the narrative. Right now, the dollar is still strong, but we're retracing. Let's see if they're offering a discount. With that being said, let's come over to, let's take a look at gold. Let's look at the metals. Let's come over and look at the metals. So like I said, the dollar showing weakness. Let's go out to the 6-month for gold. 6-month time frame for gold. Again, we got 28 days left. Gold parabolic, out of here, home run. That's what a home run looks like. That's because the dollar for the last several years have been showing uncertainty. I just showed y'all that the dollar for the past several years, since the beginning of the pandemic, has been consolidating, and that's forcing smart money to go into other markets, and they're jumping into markets like the gold market, crypto, metals, stocks, real estate, whatever they're doing. So gold looking real good, still showing strength. Let's see how we close this candle. It's going to be interesting for gold. It's going to be real interesting for gold, and I'm anticipating this. Gold is currently trading at $3,313. We're about to close the first half of the year at the end of June. We got 28 days left. Where do we see gold? I believe I got a video where I said gold could potentially go up to like $5,000 this year. And I think I called that like earlier in the year. But let's see how we open up in 28 days, the new candle, the new 6-month candle that's going to get us through the rest of the year. Where do we see gold? Y'all tell me in the chat. Where do y'all see gold closing for the year 2025? It's currently at 3,300. I definitely see it getting up to 3,500. I definitely kind of see it getting up to $4,000, but we're in price discovery for gold. It's never been this high. So anytime price is just running off like this, all you can do is kind of like get in sync with it from a trader's perspective. All you can do is get in sync with it. All you can do is get in sync with it and ride it. There's nothing like it's at a premium. Even buying the metal right now, I'm sure a lot of people are desperate for owning gold, but I can't call right now. It's just too expensive. And me being a trader, me knowing technical analysis the way I do, chasing this, I couldn't chase it. I couldn't tell myself to chase it. We had one opportunity back in December, November of 2024, the fourth quarter. It retraced down into this area right here. It offered you about 2,500. And I got on record video me saying this is your only opportunity during the holidays. They offered you a discount during the holidays to buy it. So it hasn't returned since. Y'all should already know in the chat what this is right here. This is a monthly time frame. That's what I'm highlighting right there. It retraced down into the 1, 2, and it took off. Never looked back. And let's see where it goes to close 2025. Y'all give me some predictions for gold. Y'all give me some predictions for gold at the end of 2025. Let's look at silver. Silver breaking out quietly. It's currently trading at $33.11. Also, capital flowing into silver. It's at a premium at this current moment. It's not at a discount. But let me see on the weekly. Yeah, the weekly looking high resistance. Not looking good at all as far as finding a entry. Lawrence, you say 4K gold by the end of 2025. I think that's doable. I think that's doable myself. Like I said, we're not working with no previous data. So you see on this chart right here where I can look back at previous highs and look at old data. For gold, we can't do that. So all you can do is get in sync with it. For example, this is gold. We can't look back at any prior price data. So all we can do is align ourselves and ride it higher. And then we're going to use like certain PD arrays, for example, this volume imbalance right here. You see that volume imbalance? Let me highlight that right quick. Or this fair value gap plus volume imbalance right there. As price breaks out like this and it shows no sign of retracing, all we can do is highlight the inefficiencies in price and anticipate that it could come back down to these levels. That's all we can do as it breaks out. So that's what I'm doing. I'm analyzing it, seeing if it could potentially come back down, trade to these levels. And if it doesn't, you continue to stick with the trend higher. TG 1974, you said gold 4,500 to 5K. I agree with you. It's definitely, especially once we get into the fourth quarter of the year, especially if the dollar continues to go lower, it's definitely going to want to reach higher and continue to go higher. Also, as the Treasury consolidates, as the dollar consolidates, that's all a smokescreen for smart money institutions to go in there and stockpile gold and shit like that, precious metals. So that is a smokescreen as they accumulate commodities, because y'all should know we're probably going to go to a commodity backed system. But this is silver trading at $33 right now. It is currently breaking out. I'm already calling the breakout. It's going to want to come up and test this. Let me see. Not the previous. Let me see. Yeah, the previous all-time high, which is right here. Previous all-time high is $49. That happened back in 2001. So y'all already hearing it first. I don't know how long it would take. It could take months. It could take the next few years, but it's definitely heading for its previous all-time high, and it's going to want to break $50. So I'm looking forward to that. I'm invested in silver myself. So that's the metals market. They also got like copper and other things, but I like to stick to pretty much gold and silver. We covered the dollar. We covered the Treasury market. So let's go ahead and come over to, let's come over to crypto. Let's look at, start with Bitcoin. TG 1974, you said, yes, silver is affordable. Yes, but it's at a premium as well. So yes, silver, because see, I think a lot of y'all might get me confused as far as like, again, I'm in a different lane. I'm in a different, what I do is just different. So I'm not expecting everybody to do what I do. But right now you might be just looking at price of silver and saying, oh, that's affordable. It's only $33. Yes. But if you're watching my channel, we want precision. We want sniper entries into any market that we enter. So right now, silver is running at a premium. You didn't accumulate it at a discount. So for example, you see this retracement right here. This was when I was accumulating silver. This was during 2021 era, 2022. They gave you several years to accumulate silver at a discount. Silver was at $20. It went down to $17. So y'all see this fair value gap on the 3-month time frame? That's when I was in there accumulating silver. I was just learning this skill set. I was getting better at this skill set. I said, hey, I want some physical assets. I wanted to accumulate silver. And this was the time during the heart of the pandemic where I was in here scooping up silver. Now I'm not buying silver. Do you think I'm from $17 up to $33? Do you think I'm in here accumulating silver right now? Because look, it's ran away from the discount. If you learn this skill set, click the link in the description. You can also learn this skill set. That's for the Patreon, so you can understand where I'm coming from. The market only does several things. It goes from a discount to a premium to discount, and y'all should know the other things that it does. We want to be buyers at a discount. We want to be sellers at premiums. So right now the market is running at a premium, and it's no longer down here at this discount. So if you missed it and you might think it's still cheap, just know you're going to be buying it at a premium. You're going to be having to pay more for an ounce of silver than what you could have got it for several years ago. Oh, what's up, B Rush? Shout out to you. Oh yeah, I done did a lot. Hey, I got a tan and everything, B Rush. I'm black as hell. You know what I'm saying? I'm black as hell. I got me a tan, but definitely got a tan. I need to do some more tanning. I need to get me some more beach time in. So definitely at some point this summer, I'm going back to the beach. Definitely. But shout out to you. Shout out to everybody just joining. If y'all just joined, to smash that like button. I'm doing a macro. If you're just joining, I touched on several things. I touched on some headlines with legislation and whatnot. They got a lot of states preparing their crypto legislation. We're still waiting on the crypto bills to pass, the 3 major ones. Let me come over here right quick. Yeah, ask ChatGPT. If y'all don't know, man, ChatGPT will do all the work for you, and it will pull up everything, let you know everything. So we're waiting on the Digital Asset Market Clarity Act, which I haven't seen too much going on with that. Y'all let me know in the chat, what's the update with this act right here? If y'all stay with the act, the Digital Asset Market Clarity Act, what's the word with that? We know about the Genius Act and the Stablecoin Act, but what's up with the Digital Asset Market Clarity Act with the SEC, CFTC, and who's going to get like clarity over each, who's going to get what as far as what market they will control? But and also we talked about Jamie Dimon. What he had a video that kind of went viral. Jamie Dimon is promoting war out here. He's promoting that the United States should not stockpile Bitcoin. They need to stockpile bullets and ammunition and drones and nuclear weapons. That's what he's advocating for. So that's Jamie Dimon, what he got to say. So that's very telling. Okay, you said that's the framework bill, that's regulations. As far as a timeline, B-Rush, as far as a timeline, when are they going to talk about that? When are they going to like bring it up? Is it also before August, like Trump? Is that during the time frame they're working on it, before August? Is that when they're trying to get it done before August? Before, that's when Trump wants it on his desk or whatnot. But let me continue, man. Bitcoin trading at, this is a 3-month time frame. So for all these other markets, everything that I'm about to cover in the crypto market, I'm gonna give you a macro analysis. I don't want to keep y'all too long this evening. I'm gonna give y'all a macro analysis as far as long-term and perspective. We're gonna look at it from a position trader's perspective. That's when we're long-term investing. So this is for you long-term investors. If you're interested in short-term trading, then I'm not going to pretty much do too much of that today. B-Rush, you said June markup dates are June 4th and June 10th. Markup is where they vote it out, the committee. From then it goes to the House or the Senate. So we could be looking at a voting bill before July or June or the end of June. Okay, the end of June. Okay, that's cool then. We're going to definitely keep up with it. We're going to cover it. We're going to talk about it. Because that's a big deal, and we shall see. So Bitcoin, we're currently in June. As I stated before, we're currently in June. This is the last month of the quarter. We're coming to the end of Q2. We only got 29 days left to end quarter 2, 2025. July, we will roll over into Q3. And from there, it goes from July, August, September to end Q3 2025. So Right now, Bitcoin still holding strong, very bullish. I want to see where we close this quarter at. So this quarterly candle, I want to see where we close it at. But to open up Q3, I'm going to anticipate it to go continue higher. So anticipate in Q3, Bitcoin going higher and higher, reaching new levels. Go down to the monthly. As y'all know, we just began June 1st. So throughout all of these markets that I'm covering, each one of these assets, we're going to be, we just began the new candle. So there is a new monthly candle across all these assets that I'm about to cover, all markets. So as you can see, this candle right here just opened. There's 29 days left to complete June, and it's already reaching higher. So we already took out this high right here. This high right here was the previous all-time high. That was 109,000 for Bitcoin. Last month during May, we went up to $112,000. So here we are, already opened up. And I'm going to ask y'all in the chat. Y'all should know what I'm about to ask y'all because I do it every time. What side of the market, because we know above old highs and below old lows, there's liquidity pools. So what that means is that's where the pending orders are in the market. Price is always going to seek liquidity. That's an algorithmic perspective. The markets are algorithmic and they repeat functions over and over again. So just stay with me. If you don't know what I'm talking about, just pay attention. So what side of the market do y'all see it reaching for? Previous month's high, or coming back down and reaching for the previous month's low, or ranging inside of this candle right here? That means we're not going to break out and reach for neither side. Me personally, I don't care if it doesn't break out and consolidate. I'm always going to want to reach for the liquidity. I'm always going to want to see price reach for liquidity either above or below price. So I'm going to go ahead and tell y'all I'm anticipating at minimum Bitcoin going up higher, taking out last month's high. Okay, we got some people. Lawrence, you say higher. Daryl, you say higher. Gabrielle, you said take out high and come lower. So, okay, the come lower is important as well, because the reason it could potentially take out last month's high and then drop down and retrace is because we're about to close the second quarter of the year. Q2 is about to end. So it takes 3 of these candles. Q2 started on this candle right here in April. This candle right here started Q2, April, May, June. That's 3 months. Close the quarter. Go into quarter 3. So I'm already anticipating Bitcoin continuing higher, getting people riled up, hyped up, and hey, I ain't got nothing against Bitcoin. Bitcoin doing this damn thing. You know what I'm saying? Bitcoin doing this damn thing. So we waiting for this in the rest of the digital asset markets. They're just dragging that out though. Hopefully because for bigger purposes and bigger things. So that's Bitcoin. I'm gonna leave it there for now. We just began the second quarter. I mean, we just began June, which is the end of the second quarter of the year. So we already know that's our bias. If y'all don't understand what bias means, bias simply means the direction in price. Do you see it going higher or lower? So we already determined that our bias is higher. And price is going to want to reach for last month's high. So y'all need to take a notepad and jot that down. For any market that you're following, take a notepad and jot that down. That's how you every month you want to do this. You need to have a directional bias. Are we going higher or lower based on where the liquidity is? If it's going over your head, replay the live stream, subscribe to the channel, replay it, whatever. But if you're brand new to technical analysis, you're brand new to trading, take a notepad. Get you a notepad, take a pen to paper, and you jot down BTC for the month of June, directional bias, higher, take out previous month's high. Jot those notes down, and then if you don't do anything else, you come back at a later time to see if that happened. And if that happened, you need to further investigate these markets. Something, you know what I'm saying? You need to further investigate what's going on in price, because there's something going on in price that most people aren't aware of. So that's that. And we got 4 weeks. Let me see right quick. Let's drop down to the weekly, and it's going to tell me, because I'm thinking we're going to have a 5th week in June. So 1, 2, 3, 4. Yeah, they're going to have 5 weekly candles in the month of June. 5 weekly candles in the month of June. So y'all be ready for that. So that last week of June, so if we come back to the economic calendar, this week right here, the week of June 29th through the 5th, that's going to be that fifth week in June in the markets, not in real life. Just know if you're in the markets, we're going to have an extended week in price action. So this week right here, I'm not even going to consider that a week. If I was trading this market, I'm going to be done the 4th week of June right here, the 22nd through the 28th, and tune out 29th through the 5th. Just tune out. You just want to zoom out. And let me take a quick peek at that week. And the reason you tune out, y'all tell me in the chat, what would be a reason to tune out based on the economic calendar? I just talked about it when I reviewed the calendar earlier. Why would we tune out this week right here, that 5th week of June? We will print a new monthly candle that week. We will print a new monthly candle. So it will be July, but it's going to be an extra week in the markets that says June. But what would be a good reason just to zoom out, tune out this week right here? I just told y'all. In the chat. I'm going to give y'all a minute. I need a response. Somebody who really pays attention to the content, because I don't do nothing random. Everything is with a purpose. Nothing is random that I'm doing when it comes to analyzing. This is what professionals do. I'm already forecasting 5 weeks in advance. So who else is going to show y'all to do that? Who else is going to tell y'all to do that? Who else is going to tell y'all, hey, on this week right here, just ignore this week right here in the markets because of certain things going on in the economic calendar? Who has a good reason? If you don't, I'm going to give y'all about 30 seconds to answer. I'm going to see who really pays attention. That's a good answer, Gabrielle. That's a good answer. That's a good answer, Lawrence. Those are good answers. So y'all are correct. Lawrence, economic calendar. We already know. I just told y'all prior to even mentioning this that during weeks of non-farm payroll, that stands for not for professionals. We want to be out the market as traders by Wednesday, the morning session of Wednesday. After that, I just told y'all earlier that the train has left the station, or we're in a sundown town. And if you get caught in these markets and you're just tied up in these markets after Wednesday of a non-farm payroll week, then you're on your own. As far as, either if you're a long-term investor, you like to analyze, you're going to be bored and chopped out. If you're a trader, you're going to be chopped out the market. We already can anticipate that. Also, it's a bank holiday, July 4th. So we got a holiday coming up. So that's about to be around the corner. Like, it's already June. July 4th is about to be around the corner. So y'all going to be popping fireworks. It's going to be a lit weekend that week. And July 4th is on a Friday. So some of y'all might be off on Thursday and whatnot. Friday, y'all might get some extra days in. So that's a reason why we're going to just ignore this week right here, because it's a bank holiday. It's the end of the quarter. And we have a lot of high impact news that really impact the markets, non-farm payroll. So that's what I was just doing. I was counting the weeks in the market. We're going to have a 5th extended week in the markets. And we're going to be out of the market by that last week. We're going to ignore it. And if y'all continue to pay attention, we're going to go over it. What I see right now on Bitcoin on the weekly time frame, I see a fair value gap at BOSSI right here. Buy side imbalance, sell side inefficiency. We could potentially draw down to that. So I'll be watching. I'm still bullish though. I want to see it at least come up, take out this high right here. We just opened up the week retracing. So it could potentially come down to this area right here. I'm going to pay attention to it. Next market I want to cover is XRP. So we're going to cover 2 things with XRP. I'm going to give y'all the long-term analysis. I'm not going to do too much intraday today for XRP. I might peek at it. Then again, I might not. I'm not sure. But I'm going to give you a long-term position trader / investor, long-term investor analysis. So everything we're about to look at is from a long-term perspective. Y'all embed that in your mind, because some of y'all have short-term memories. because sometimes y'all don't know what y'all looking at when I'm analyzing. So I'm gonna look at this, and then I'll also bring up the XRP futures contracts. We're gonna discuss that as well. We're gonna discuss the futures contracts. So what I'm pulling up right now is the CME and the Coinbase futures contracts, and we're still talking about them. We're not gonna veer away from the futures contracts. One thing I noted was we have rolled over. So the May contracts, if y'all following the futures, the May contracts are over. You need to update your charts to the June contracts, whether you're looking at the CME futures or the Coinbase futures. The thing the thing that's new to me is trading month-to-month contracts. I'm used to trading quarterly contracts. For example, April, May, June. That's a quarter contract, and then the contract ends, and then the next contract will go from July, August, September. But right now, we only got month-to-month contracts, so we don't have a long time to find opportunities in these contracts. Also, they're not liquid. They're not really liquid still. So I'm paying attention every day. I'm keeping up with the futures markets with crypto. They still don't have institutional liquidity flowing through them yet. They're there. Don't get it twisted. They're there, but the volume has not picked up in these markets just yet. But I'm still paying attention to it. We're gonna stay tuned with it. This right here is the CME futures. Right here, the next one is the Coinbase futures right here. So the Coinbase futures just rolled over into the June contract. And this is the daily time frame. And right here, this is ugly to me. I don't know when. Matter of fact, let's ask ChatGPT. Let's ask ChatGPT. Will XRP futures contracts offer quarterly contracts? Oh, what's up, Trendsetter? You said it's coming. Retail might be priced out soon. Not promised, but framework crypto bill is up to pass this month. You say ZBEC contracts and partnerships are forming fast, up 50%. Okay. I typed in, will XRP futures contracts offer quarterly contracts? ChatGPT said yes. XRP futures contracts do offer quarterly contracts. The CME lists XRP futures with the following contract specs, which we know all that. And it says listing cycle, 6 consecutive monthly contracts, 4 additional quarterly contracts. This is what I like to trade right here. I like to trade the quarterly contracts, March, June, September, December. That gives us more data and price to refer to. These month-to-month contracts, that's new to me. I'm not familiar with that. Additional December contracts if one is listed. So they're pretty much coming. I haven't seen them yet. They're coming though. Let me see right quick. Let's come back over to XRP. So that was the futures contracts for XRP futures. We're going to cover other futures contracts as well. Every day I trade the NASDAQ S&P. I'm not covering that right now. I'm going to make that exclusive for my Signal service in the Patreon. So y'all be on the lookout for that. Sign up to the Patreon. But if you're just joining, man, make sure y'all hit that like button, subscribe to the channel, share the link, sign up to the Patreon. Now we're about to talk about XRP. We are in the month of June. Like I just stated with Bitcoin, it's the month of June. This is the last month of the quarter, Q2 2025. I'm sitting right here on a 3-month time frame. Price of XRP is currently $2.18. They're just holding on this time frame. The market is bullish. We are in an expansion profile. The markets only do 4 things: consolidation, expansion, retracement, reversal. It's real generic. These functions repeat over and over again. The markets don't do nothing else. So these functions repeat over and over again. Right now, we're in an expansion profile. I am currently, when I zoom out long term on a 3-month to 6-month time frame, I am bullish. We are in a buy program. Let me take a peek at the 6-month. Let's go out to the 6-month. So on a 6-month time frame, which is interesting, at the end of June, not only will we complete the second quarter of 2025, we will also end the first half of 2025. So the first half of 2025 we only got 29 days left, and the first half of 2025 will complete, and then we will open the second half, which is 6 months of 2025. So this candle on the 6 month time frame, it closes in 29 days. That's going to be very significant, very important. How do we open up the second half of the year will be very important to me. How we open up in the second half of the year will be very important. It looks like they want to continue to close this month and hold price. So I'm not anticipating much more in the next 29 days. But, and I highlighted this before, we're getting closer to this date, or we're getting closer to it. I wanted to see price move away, go higher. If we don't move higher, y'all in the chat, what do y'all see on the 6 month time frame? What do y'all see on the 6 month time frame? What's up? What's up, Trump? Trumpet Swan. He said, "Why is my weekly?" I'm gonna look at that in a minute, Trumpet Swan. Let me focus in right now. Let me focus in right quick. I'll get into that in a moment. I asked the question on a 6 month time frame. What do y'all see potentially forming in the markets? What do y'all see? Anybody in the chat? Anybody in the chat? Not a Sibby B Rush, but the opposite of a Sibby. Opposite of a Sibby. Shout out to you, Daryl. Bissy. So, again, we got 29 days left. We got 29 days left to complete the first half of 2025. 29 days left. That's not long at all. That's going to fly by real quick. Like I just said, it's going to be July 4th real quick. We only got a few weeks to July 4th. So when this candle closes in the next 29 days, as soon as that candle closes, this buy side imbalance, sell side inefficiency will be valid. It's not valid right now. It becomes valid once this candle closes. And how do we open up the next candle of this, which is this the next 6 month candle, which is the second half of 2025? How do we open up that next candle? That's going to be very significant. Let me get this another color right quick. Right here. Let me see right there. So this is going to be a 6 month fair value gap right here. 6 month fair value gap in the form of a BISI, which stands for buy side imbalance, sell side inefficiency. We're already forecasting price. So I've been looking at this. I might not talk about it all the time, but I've been watching this very closely because I want to see how this candle closes. Like, we've been trapped inside of this, and this candle takes 3 months. So we did a lot of damage in this 3 month, this quarterly candle right here, which was the first half of the year. In the first half of the year, we traded higher. We took out the previous all-time high right here back in 2018, and then we traded lower. And now we're just holding price. That's the manipulation by the algorithm. That's the manipulation by smart money. They're just holding price. You got to zoom out to get this perspective. So what we're watching for is, where did this candle close in 29 days? Once it closes, this gap forms, and this is a large inefficiency in the market. Y'all are going to hate this. Y'all going to be frustrated. Y'all going to be tapped out as Bitcoin continues to go higher. Y'all going to be real pissed off. If potentially, and listen to the words I'm saying, if and potentially can come down to this level right here. Now, do we want to trade all the way down there? I would hope not. I don't want to see that. But if it does, oh well. I mean, that's just the markets. You know what I'm saying? Like, nothing to be frustrated about. These things are algorithmic. You can't fight the algorithm. You can't resist it neither. Like, it's going to do what it's going to do. Resisting it is only going to stress you out and make you want to sell your position at a loss. So that's all you can do. So what I just did was I'm grading the ranges inside of the fair value gap. And as I eyeball it, I haven't calibrated it, but as I eyeball these levels, Look at the potential level. And y'all seen me done this before. I done this before during the top of the year. And I'm going to show y'all what I did. I highlighted this area a month in advance, and then eventually went down there. We traded down there, and it only offered one opportunity. So we're looking at the top of the fair value gap, $1.62. We're looking at the upper quadrant of the fair value gap, $1.40. The midway point, which is a key level, $1.18. And I don't want to see it come below that, but again, these markets will do it. They will come below that and drop price way lower and come down to the lower quadrant, which is 96 cents. And then I don't see it coming back down here at the bottom of the fair value gap. If it does that, that's 74 cents. I don't see them offering. Me personally, I'm going to be emptying the clip. I'm going to empty the clip if they decide to drop it below the midway point of this fair value gap. $1.18. Me personally, that's still, that might be a discount for people newcomers that are new to the market. But me personally, I can't find myself purchasing $1.18 XRP. That's just me because I'm spoiled. We've been in this for a very long time, back down in these ranges down here, very long time. So buying it now, I feel like there's other opportunities and other assets, or I can just go trade if I need the extra money. Let me read the comments. What's up, Ryan? Shout out to you joining. Law Docs, you said not my $1.60. You've been calling for that, Law Docs. Trendsetter, you said no emotions with the algorithm have to be emotion. Yes, emotion free. Yes, emotion free. No emotions. No emotions. As like look how I'm talking to y'all with confidence. Like I've seen this. I don't get scared in these markets because they just repeat all over and over again. You just got to know how they repeat. And look what I'm highlighting. So this is a 6-month time frame. We're about to, in 29 days, we will close the first half of the year, and then we will roll over into the second half of the year. Adam, shout out to you. Imagine a world where you are stacked with just a handful of ISOs. They raise in price at the regs. You take a percentage of your portfolio and lock it into a pool USDC and let it compound. Wealth coming soon, for sure, for sure. That's definitely a strategy that I would slowly participate in that. I ain't gonna just go full blown into it, but for sure, that's definitely coming. We have not seen a world like that before. So this, if y'all don't know right now, as we're giving a long-term analysis. Just zoom out. My expectations are low right now as far as things happening in the next 29 days. I think the first half of the year is over. I think the second quarter of 2025 is over. So we're waiting for Q2 to end and the first half of the year to end, and we're waiting for the second half of the year. So in the meantime, kick back and prepare yourself for the third quarter of the year and the second half of the year. That's why I've been telling people in my communities to go touch grass, go live life, because we got to get through this long process. These things don't happen overnight like they wanted you to believe. They're not going to happen overnight. It's a process. Just go look at any market. No market in history happened overnight, not even Bitcoin. Bitcoin didn't happen overnight. So zoom out. What I like to teach y'all, what I want to get people that are watching me and in my community is learn how to cash flow. Learn how to cash flow in these markets. And that's where we learn trading, my trading techniques and the things that I'll teach y'all in the Patreon and what I show publicly when I have time. Like, that's what y'all need to learn so that y'all can take advantage and start trading to earn cash flow, so that you can take cash and either reinvest it into your business, into yourself, or into assets. So that's what I like to teach and cover. So from the 6-month time frame, let's drop down to the monthly time frame for XRP. So like I just told y'all, listen to the words that are coming out of my mouth. I'm lowering my expectations. I'm not anticipating nothing else for the first half of the year. ending the first half of the year and ending the second quarter of the year. Back out to the 3 month. So on the 3 month time frame, what have we done so far on the 3 month time frame? Like I said, this 6 month fair value gap, I'm gonna hide that for now. That is not valid until we close the first half of the year. So when that 6 month candle completes, that will become valid. But what we can look at is the 3 month fair value gap that I called ahead of time. So this orange highlighted area, we dropped down there earlier in the quarter. I believe that was April. We dropped down there and they offered y'all the opportunity to accumulate XRP at a discount. And it dropped down to $1.61 and it hasn't been down there since. And after that, we rallied higher. Y'all should know what this is that I teach in the chat, in the live stream. Y'all should know what this wick is. You never want to ignore wicks in the market. That's a key level that we traded up into. Right there. Key levels that are like retail aren't aware of these levels. So what I'm doing is, all I'm doing is taking the Fibonacci and I'm measuring the wick. So what I'm doing is I'm getting the closing price, the high, and the midway point. And just like I did the fair value gap, we got quadrants. We got the upper quadrant, we got the lower quadrant. That's the same exact thing I'm doing with this wick right here. We're measuring this wick in the ranges inside of it. So this candle right here, it opened up at the base of the candle, which is the body. The body opened up at the base. It traded down into discount. That was your opportunity to pull the trigger. You know, we teach a snipe. We trying to pull the trigger at discounts. Shout out to y'all who took advantage of that. Some of y'all was hesitant, thinking it would potentially go lower, and it could have. But some people was calling for ridiculous prices, though. Some people was calling for 60 cents. No. But what it did was it dropped down to discount, and then it rallied higher and traded up into these levels at a premium. So how do you determine what's a premium and a discount? I'm about to explain it to you. Whatever the current price is, wherever price is currently trading at right now, which is 218, any PD array or the things that I teach, the concepts that I use, any PD array below that price is a discount. Any PD array above the current price is a premium. That's how you determine premium and discount. And then there's premium discounted ranges as well. So those are two ways you can determine if we're in a premium or discount. It's very simple. So after trading down the discount, we trade up to these premium levels, which is the upper quadrant. It's not random that we just trade up into this wick and kind of reject. And now we got 29 days left to complete the quarter. I'm not anticipating nothing else. Law Docs, you say, so what creates a flash crash down to the downside? Liquidity. That's what creates it. There's orders above and below the market. So what they do is they come in the market, they inject liquidity into the market. It's time-based. So all markets are time-based, and it's coded into price when they're going to inject liquidity. I show this all the time. I demonstrate this all the time. That's how I'm able to call markets on lower time frames. That's why we talk about low resistance liquidity runs, high resistance liquidity runs, etc. We identify where the liquidity is. If we know where the liquidity is, you pretty much understood 80% of what's going on, because you was able to identify where the orders are in the market. If you know where the orders are in the market, you have an advantage over everybody else, because that's how the institutions do it. That's how the algorithms do it. I didn't create this. I was taught this, and I investigated it. I studied it for an extended period of time, hours and hours, and it's not a lie. It's real. You got to know what's going on. If you can identify where the orders are, you have the cheat code. And you can watch price go to levels with precision based on what I talk about. So to answer your question, Law Docs, find the liquidity. If you can find the liquidity in the market, if you can identify these inefficiencies and these voids in price, then you have the advantage. And price does what? Y'all tell me in the chat. Complete the sentence. If price does nothing else, it's going to do what? Y'all finish the statement. If price does nothing else, it's going to do what? Finish the statement, because I repeat this shit over and over again. No, I don't see the ones and zeros, B Rush. I wish I did, but kind of do. I kind of do though. I ain't gonna lie. I like to use the matrix narrative, but I kind of do see the ones and zeros based on what the orders are. The orders are the ones and zeros, the liquidity. There y'all go in the chat. If price does nothing else, it's gonna seek liquidity. I'm a liquidity-based trader. I'm always gonna attack the liquidity. That's how I'm able to go on lower time frames and attack and understand, okay, it's going higher here, it's going lower there, because it's always seeking liquidity on all time frames. Liquidity is on micro time frames, nano time frames. They're leaving behind liquidity on all time frames. I can go down to a 1 second time frame, a 15-second time frame, and show you, okay, it's attacking liquidity here and there, because the markets are coded to just go back and forth, seeking liquidity throughout the markets. No, I'm not the Neo of algos. First of all, I believe, okay, let's check it out. The Matrix theme. I believe there was more than just Neo. Neo couldn't be just the one. I think there was more than him. Like there was everybody that got out of Zion was also Neo. They just didn't fully tap into their potential. I didn't create this. What do you say? What's his name? Morpheus. Morpheus came to me. I took the red pill. I unlocked what was behind price. And now what I'm doing is I'm Morpheus giving y'all the red pill. That's all it is. And then that's why I go live. That's why I come to YouTube, because not too many people know about this shit. There's not a lot of people that know about what's going on behind price action. You have to have a mentor. You have to have a Morpheus to teach y'all what's going on in price. That's the only way y'all gonna understand what's really going on. Because if you just come to this and pull up a naked chart, for example, if I do this, if I just do this right here and I can zoom out right quick, it won't let me zoom out. But if I just do this right here and you're brand new to technical analysis and I say, hey man, what's going on in the market? You're not going to know what's going on in the market. You're just going to see candlesticks. You're not going to understand this right here. I break it down for y'all to understand it basic. You know, I give y'all basic understanding of price. What price does. Price is repetitive. There's an engine behind this. And that's a narrative that I run with. Price is an engine. Engines only have repeating functions. So let me zoom out back. Let me go back out right quick. 3-month time frame. Just giving y'all the macro perspective for XRP. I'm not really doing no deep dive today. We're walking through price. We're forecasting. So we're forecasting. We're anticipating what's going to happen next. So that's what we're going through. 6-month time frame, quarterly close. We got 29 days left to complete the second quarter. And then where do we see price open up in the third quarter? And then when price opens up in the third quarter, remember, we're going to still be ranging inside of this wick right here, this ghost pool. So these levels will still be very important inside of this. And if we zoom all the way out, we're still inside of this wick right here as well. So this wick right here, we're still ranging inside of that. So that's still a key price level as well in price right there. You see that? If y'all was with me back in like December, January, I was highlighting this back then. I haven't referred to this in a while, but we're still trading inside of this premium ghost pool right here. We're still trading inside of that. And this was from 2018. And do you think it's random that we're just hanging out inside of that? No, it's not random at all. So I'm looking at all kind of things. I'm using different tools. It's not random at all. We got the previous all-time high, which we formed in January. That is 339. So it's looking like it wants to, let's see how we close the quarter. And then once we close the quarter, we need to get through, I ain't gonna lie, we need to get through the third quarter, bro. Like, we need to get through the third quarter for me to have more information, because this ain't looking good for me. Like, I already know the pattern on what they want to do. What they want to do is pretty much kind of consolidate this. And that's exactly what it's doing. They want to consolidate this and go into a consolidation profile / retracement. So this level down here is still valid. On the 6-month time frame, that 6-month BISI will be valid. And it's looking like they want to just come on back down, offer more discounted opportunities. but it's still bullish as you zoom out. It's still bullish in a expansion profile. Let's go down to the monthly. On a monthly time frame, we just opened up the month of June. This is the last month of the quarter. We got 29 days left, and we're going to keep it very simple, very generic. I'm going to ask y'all in the chat, what is y'all bias in the chat? Do we go higher or lower? Do we want to come down and take out last month's low, which was the May? Do we want to come down and take out the low from May? Right there, sell side liquidity. Or do we want to come up and take out the buy side liquidity from May? Y'all tell me in the chat, what's the bias? What's your monthly bias? Remember, I just told y'all, take a notepad, pen the paper, and write down your monthly bias. XRP chart, bias, bullish or bearish. What you want to see, take out sell side liquidity or buy side liquidity. So Gabrielle, shout out to y'all for participating. You see it coming down, taking out the sell side liquidity or the low. Trump and Swan, you see it going lower. So that's y'all narrative. I mean, that's y'all bias. Y'all want to see it come down, take out the liquidity. I'm going to go ahead and say my bias for the month is to come down, take out sell side liquidity right there. Because XRP right now, it's being manipulated like it always has been back during this time period. This is exactly, I've seen this too long, and I've seen this so long that I already know what they're doing. They're going to, not this long, they're not going to draw it out this long, I don't think, because we're in an expansion profile. They're going to want to give us several months of this right here. That right there. That's what they want to do. They want to give us several months of this consolidation. Not this is several years of consolidation, but they're going to want to do it for about, let's say, a few months. That's the profile they're throwing it in on the monthly time frame. And remember, zoom out to the 6 month, we got a BISI forming. This right here is a 3 month BISI. And there's orders below old low. So we still got this low right here that they left behind in April. So April it dropped lower to discount, and they left behind pending orders below the market. And price always seeks liquidity, and there's a possibility that they're going to want to drop it down, take out this liquidity down here, and come back down and fill in this inefficiency. No, nothing happens randomly. Everything is algorithmic. Everything is algorithmic. So at minimum, I want to see it come down, take out the sell side liquidity, but I'm not. That's it. That's it for me. And then if it drops down, take out the sell side liquidity, it's going to want to come down inside of this range right here. This wick. That's a discount ghost pool. So what I'm doing is I'm measuring that wick from the opening price down to the low. And we take out the liquidity right here. And it potentially come down inside of these quadrants and these levels inside of this wick right here. And then eventually probably we're going to want to come down, aim for the discount on the 3 month time frame. And that 6 month fair value gap forming. You say you're feeling 145. Ooh, that's going to be scary. Real disappointing. So they're having XRP Las Vegas and all the hype shows and all that shit. And probably, people ain't winning just yet with crypto or XRP. I'm winning, but a lot of people aren't winning yet with XRP. And their expectations, they had their expectations way too high. Way too high. Way too high. So let's drop down. Remember, we got 4 weeks or 5 weeks in the market. We got 5 weeks of trading for the month of June. So what I want to do now is drop down to the weekly. Y'all should know my monthly bias is bearish. I'm bearish on the monthly. And you already can see this candle right here. We just began here in about 6 hours. No, excuse me, 6 minutes. We're going to see the new weekly open for the current week. So here at about 8 o'clock p.m. Eastern Standard Time, that begins the new week of trading on a Sunday. So 8 o'clock p.m. Eastern Standard Time begins the new week of trading in the market. So here in about 6 minutes, we will see that new weekly candle form. And let's see where we open up at, because once it opens up, Then we would have 7 trading days in the market to complete the week. And again, I'm lowering my expectations for the week. At minimum, I want to see it come down, take out these lows down here. Come down, take out those lows right there. Let's go down to the daily. On the daily time frame, remember we was dealing with the Dilling range? That Dilling range that we was dealing with for the past 20 trading days. Let me see. We have cut through all that. And the market is bearish. So in the past 20 trading days, the market pretty much has reversed bearish. 1 second. Right there. So the market is in a sell program, a market maker sell program. It went up to a premium level. It went up and took out some liquidity back here, these old highs where the pending orders are. And now it's currently in a short-term sell program. So what I want to see it do is drop down. And I'm already telling y'all ahead of time, it's going to want to drop down and take out sell side liquidity. Look at this BISI right here. This BISI right here. That's a buy side imbalance, sell side inefficiency. But now it is a inversion fair value gap. It's no longer a BISI. Now it has become an inversion. So gaps, we can trade through them and use them either as support and resistance. Also on the daily, we got this. Inside of the inversion fair value gap, we got a SIBI. So let me highlight that right there. That's a SIBI, which stands for a sell side imbalance, buy side inefficiency. Right there. And that's an area in price that we can come up and trade into. But I want to see weakness. I want to see it go ahead and drop down. And we got all these lows below the market where the liquidity is resting. In the next 12 months for XRP, let's zoom back out because that's what I'm doing right now. Let's go back out. Trumpet Swan. If I just zoom out, I'm going to come back down to this right quick. What I need to do is on the 6-month time frame, I zoom all the way out in the next 12 months. Well, matter of fact, let's go out to the 12-month candle, which I don't normally go out this far. But every one of these candles, this is a 12-month candle or 12-month chart. 12-month chart. So every one of these candles takes 1 year. Every one of these candles is 1 year. Like, so that's how long term this is. Each candle is 1 year. I want to see in the next 6 months where this candle closes. So we need to see, and I already outlined on lower time frames the possibility that it can retrace lower. But I want to see in the next 6 months, which completes this yearly candle, where does this close? So I need more information for me. Right now, I'm kind of bearish on XRP as far as going down, taking out liquidity, picking up orders, offering a discount opportunity for smart money institutions. And then we got 7 months to complete this candle right here, which that's a long time zooming out. I don't like to look out this far on this time frame, but because I need more information because there's more moving parts on lower time frames. But in the next 12 months, this candle, let's say, okay, for example, right now, let's say this candle closes right here at December 2026. This candle closes like it is right now. Let's just say that. Again, we got a long time before that happens. If this candle closes right here, y'all should know what this is right here then. Which I don't want to see this. In the next 6 months, me personally, I don't want to see this. But who cares? It doesn't matter about my feelings. It can do it. I've seen it over and over again. I don't want to see it, but the smart money doesn't care. The algorithm doesn't care. So let's say this candle right here, let's say it's December 2025. We got 29 days left to complete the month. Boom, it closes. We open up in January 1st, 2026. Y'all should know what this highlighted area is right here. That would be a possibility that we can trade back down into this level and offer some type of discount opportunity in the market. Do I want to see that next year sometime? No. That's why we need to see how we can continue and finish on a 6-month time frame. Let's go down to the 6 month. Where do we close this candle in 29 days? Where do we open up the second half of 2025? You already know what's forming down here. Once this candle closes, this candle opens. Y'all know what's forming down here at discount. The possibility that price can come down to that level is high because it's an inefficiency in price. The algorithm would like to go make it efficient. And then we got to wait. We need more information, more data. So hopefully that answers your question as far as the next 12 months of price action. We need more data. We need more information. So right now, this is still a long-term time frame, 6-month time frame down to the 3-month. These are long-term time frames. All of the we can't, before we can get to the next 12 years, excuse me, not 12 years, the next 12 months, we need to see what are we doing right now in the next 3 months, the next 6 months. That's the only way we're going to be able to analyze the way I do it to figure out where we're going in the next 12 months. We do know there's orders above the market. So we got buy side liquidity. There's pending orders resting above the market. And we got to take it 1 day, 1 week, 1 month at a time. That's how that works. Everybody else is just going to give you everybody else is going to just stimulate you and make you feel good about, oh, in the next 12 months, I see XRP at $150. Y'all have not once heard me say that. Y'all never heard me say XRP at $50 in the next 12 months. Y'all never heard me say that because that's not how I analyze the market. That's not how I do it. I'm a trader first. So I do a deeper level analysis than somebody who's just going to throw out some numbers to you. That's always going to make you feel good, throwing out numbers and saying, oh, in the next 12 months, I see XRP at $150. That's some bullshit. Y'all never see me do that. Can it happen? Yes. Is it realistic? No. So hopefully that answers your question. If y'all just joining, man, smash that like button for me. If you're in the bushes and you're not subscribed, I'm almost to 1,000 subscribers. I need a small percentage of people to go ahead and that aren't subscribed. Go ahead and subscribe. Help me get to that 1,000 subscriber point. I really appreciate it. If y'all are interested in learning how to do technical analysis, if you're interested in learning how to trade, click the link in the description and get the beginner lessons. I got signal services coming as well. Once I get off this live stream, I'm going to go back and working on the signals, and I'm trying to automate it. So it's taking me some time. I'm trying to automate it to where I'm on TradingView. I go to an alert. For example, this was a test alert. No, I don't want to go back to that. Let's go back. Anyway, I'm trying to automate it to where I send a signal alert. I send the message inside of TradingView. It goes directly to Discord. Y'all get the signals in Discord, and boom, you plug your information in. You use your own capital, and that's simple. Said do a face grabber for us. I ain't what this right here. When the price goes to 100 in the next 12 months, I see XRP going to $150 and grab your face like that. You know what I'm saying? Yeah, you're gonna see a whole lot of that going on. You're gonna see a whole lot of that going on. So let's go back down to the monthly. Again, my bias this month, bearish. I want to see it come down, take out sell side liquidity. That doesn't mean it can't go higher neither. So I just know I want to see price come down and take out the sell side liquidity. I want to see price come down and take out the sell side liquidity. Let's go down to the weekly. Again, we got 5 weeks. There we go. We just opened up. If y'all just joining, we just opened up the new week of trading. So it just literally opened up here 2 minutes ago. So we got 7 days left to complete the week. It's going to be a long week. We just began. It's going to be a long June, I feel like. A long June. It just is what it is. So I'm expecting price at minimum. What's the bias? If we know, check it out, y'all in the chat. If we know our bias is bearish, we want to see last month's liquidity taken out. Here it is right here. What's our weekly bias? We just opened up the week. Do we trade lower, take out last week's low, and go ahead and clean out last month's low? Or do we come up higher and take out previous week's high? It's that simple. What's your bias for the week? Y'all let me know in the chat. What's your weekly bias? Right there, sell side liquidity. I want to see the weekly candle. I want to see it drop down, take out last week's low right here. I want to see it drop down, take out last week's low, and take out last month's low right there. That's my bias. Lawrence, you said consolidate. Okay, it could possibly do that as well. It can possibly consolidate, which means if the market consolidates, this candle right here, this weekly candle, it will stay inside of this range between last week's high and low. So that's definitely a possibility. You don't never want to write that off. But like I always say, I'm always going to seek the liquidity. I like to attack the liquidity. So I'm always going to have a bias of either buy side, sell side liquidity. If a week happens where we just consolidate and we don't do nothing, that's most likely because of the economic calendar, high impact news, end of the month, bank holiday, those things right there. Those are those factors that could potentially allow price to stay inside of consolidation. But I'm always going to be picking the side of attacking liquidity. So I'm bearish on the week. I want to see price drop down, take out sell side liquidity. So let's go down to the daily. It is currently 8 o'clock. So that means it is Monday in Asia. The Asia session just began. The Asia session goes from 8 o'clock p.m. to 12 o'clock midnight Eastern Standard Time. If you're doing any type of analysis, if you never heard me say this, you need to adjust your time on your charts to UTC5, New York Eastern Standard Time. That the algorithm is coded to New York Eastern Standard Time. So wherever you're at in the world, adjust to New York Eastern Standard Time. Whenever I'm traveling, I'm always on New York. Whenever I'm traveling and I'm trading or I'm looking at the markets, I'm always going to be on New York Eastern Standard Time. It is what it is. So this is a daily time frame. A lot has happened. A lot of liquidity has been attacked. So you see these old trend lines. We attacked a lot of that liquidity. We trade down into this BISI, which now is an inversion. And now I'm bearish. We're seeing weakness on price. And I want to see it drop down, take out liquidity. We might consolidate this week. So let's see. Law Docs, you said we're going to see the June bug and the flash crash candle in the works to liquidate the longs. So back when XRP took off. You mean the shorts, Law Docs? So on the daily candle, just like we showed you a monthly bias, a weekly bias, let's go ahead on the daily time frame. This time frame is a short term, like when we're analyzing it from a short-term perspective. Also, it can be a long-term chart as well. So every chart that I cycle through has its own narrative, its own bias. It gives me my own narrative. I mean, every chart that I cycle through, it has its own narrative, its own bias. So we do a top-down analysis, monthly, weekly, daily. Sometimes we look out a little bit further, 6 month, 3 month, to get a better picture long-term. But as we cycle down, we're sticking to different narratives. So on the daily time frame, what is y'all bias? We know on the week, I'm bearish. On the month, I'm bearish because I want to see it come down and attack this. But on the daily, what is y'all bias? Do y'all see price on the daily coming up, taking out coming up, taking out the buy side liquidity, or dropping down to take out the sell side liquidity? This might confuse y'all a little bit because y'all, you might not be familiar with what I do. How can I be bearish? How can I be bearish on the month and the week and price potentially come up and take out the buy side liquidity and trade up into this area right here, which is the daily SIBI? You ever think about that? So Lawrence, you say you want to see it come up and take out the buy side liquidity. Okay. Let's take a little closer look. Let's drop down intraday from the daily. Let's go out down to the hourly. From the daily down to the hourly. Of course, I haven't been to the charts in a few days. Been enjoying life, touching grass. So I like to do this fresh analysis on a Sunday, sometimes Saturdays. And I'm going to set up my chart for the upcoming week. I'm taking this trend line. I'm drawing out to Sunday next week, 12 o'clock midnight. Right there. So, no. Bring that in right quick. Right there. So what I'm doing is I'm forecasting for the upcoming week. price action. Y'all tell me in the chat. Y'all should know the protocol on the hourly time frame. Like I just said, every time frame I use different tools. I do different analysis. So on the hourly time frame, what's the first thing I look for? For y'all that have been through the Patreon, for y'all that are brand new, for y'all that just watch the channel, what's the first thing I look for on the hourly time frame? It's the most important thing that I look for, because that's what price is going to eventually want to look for and seek for. It's always attacking certain things. There y'all go. Shout out to you, Daryl. Shout out to you, Gabrielle. Shout out to you, Ryan. We're going to look for previous weeks, highs and lows. So there goes these lows below the market that I showed y'all on the higher time frame. Y'all might want to go back and watch this one too, because again, these things, I start with a narrative. I give y'all perspective, and then I work my way down. And then you see this right here where I got my target. That's from the higher time frame. So again, I give y'all 100%, you know, I'm giving y'all 100% of this shit. So I'm not holding nothing back. Some things I hold back, but for the most part, if y'all take this down, y'all get the fundamentals, then Lord help the universe. Lord help the markets. Lord help retail for you new people that have learned this, because the retail people ain't gonna have stand a chance. So what I'm doing is I'm highlighting the previous week's highs and lows. So this low right here that I'm highlighting, that's last week's low. I'm gonna highlight that. That's sell side liquidity. That low is equal with last month's low as well. So they're stacking orders. Anytime you see these trend lines, which represent liquidity, which represents the orders in the market, anytime you see that stacking up, one second. Anytime you see that stacking up on top of each other, that's an indication that price is going to want to drop down and take that out. So whenever you see equal highs and lows, that's a strong indication. Highlight that high right there. That's sell side buy side liquidity. Last week's high right here that formed on a Monday. And that's the range I'm looking at. So that's what I'm looking at right now. I'm just looking at last week's highs and lows. And we're identifying where the liquidity is. So this candle right here, this vertical trend line, that represents the new week of trading. So that tells me the new week has began. The new week started on Sunday, 12 o'clock midnight in the market. That began the new week of trading. I already showed you. I already can see that it sold off. It took out liquidity from the Asia session during Saturday. And now it's rallying back inside of that inversion daily fair value gap. That's what we're doing. We're inside of that. So right now, we're going to go off of the economic calendar. What do we have this week? So on Monday, one second, I got to take this phone call. My bad, y'all. My bad. God damn it, I lost my chart. Right here. So XRP on the lower time frame. I'm not going to drop any below. I'm not going to go any lower than the hourly time frame. I just want you to know, y'all forecasted in the chat that y'all want to see price drop down, take out the sell side liquidity where the pending orders below the market. If we zoom all the way out, is it random that this low right here, that was the low from, let's count the weeks, how many weeks that has been. 1, 2, 3, 4 weeks ago. That was the low of May. That's the low of May right there 4 weeks ago. And it's not random that that's the low of that particular week as well, 4 weeks ago. So sell side liquidity, we always leave behind. They're going to eventually want to refer back to the liquidity pools at some point. So I refer back to this level right here, and it's equal to last week's low. You see that? See how they stacking the orders below the market just like that? This low right here was from last week. We just identified that. So now we're early in the week. We don't trade on Sundays if we're looking to trade the market. You just allow the sentiment to build. So we know Monday in the economic calendar there is no news. And then going into Tuesday, This is a non-farm payroll week, so we got a lot of high impact news in the market. So Monday, Tuesday, Wednesday, be done by Wednesday during the morning session. Let them have the market the rest of the week, because they're going to drive price wherever they decide to drive price to. So we're going to anticipate the high or the low. Since I'm bearish, I'm anticipating that the high of the week forms either on Monday, Tuesday, or Wednesday of the week. I want to see the high form either Monday, Tuesday, or Wednesday of the week. And then I want to see a sell-off at some point this week. If it doesn't do that, we're going to be in a seek and destroy profile. That means they're going to just be chopping price around. So that will be an indication of somebody else in the comments that said consolidate. I believe that was Lawrence. So if they decide to consolidate the market for the entire week, that will be a high resistance profile or a seek and destroy profile, based on the economic calendar that we have coming up this week, based on we're at the end of the quarter. So this might be a lot for y'all that are just watching. Again, that's why I say sign up to the Patreon. Sign up to the Patreon. Get access to the Discord where I have private lessons. So I'm bearish. If we're going to create the high of the week, we're going to trade higher. We're going to take out buy side liquidity right here from Saturday. Going to take out these liquidity pools and trade up into this inversion fair value gap and inside of this SIBI right here, this daily SIBI. I want to see that form the high of the week, and then at some point later this week, roll over and attack sell side liquidity. We're going to refer to that at a later time, sometime this week. We're going to refer back to it and see if that happened and played out. And better believe this is going to be recorded in live stream. Or documented. So I'm going to save that, waiting for this week, and we're watching price. That's that. And other than that, XLM, I'm going to review the rest of the market. XLM, we're waiting, just like I said with all the rest of the markets. XLM consolidating, waiting for the Q2 to end. We're waiting for Q3. XLM could potentially come back down lower as well. Let me drop out to the 6 month for XLM. 6 month. Yeah, on the 6 month time frame here in 29 days, I want to see how we close this right here. They pretty much paused the price on XLM. XLM is like stagnant. It's not doing nothing at all. It's just like sideways trading, like that right there. You see that? It retraced down. It dropped down to this 3 month fair value. It's 6 month fair value gap. Top of it. Look at the precision. Can you make that up right there? Why would it just randomly come down there, pause, and then go back up higher? No, that's accuracy. That's precision. And now it's just consolidating. So if you want to narrow your narrative, if you want to get more of a quick right now perspective, which you have to do as an analyst, okay, does it come down and take out last month's low? Or does it want to come up and take out last month's high? Last month during May, it went up and took out the last month's high. 1 second. Last month in May, XLM went up, took out last month's high right here, and traded up into this right here. That's not random. Y'all should know what that is in the chat. Y'all let me know what that is in the chat. This wick right here. It traded up into that, and it's not random that it took out liquidity, trade up into that, and rejected, and now it's back down consolidating. Let me go ahead and highlight that for y'all, for the people that are just in the back of the class. Right there. So do y'all think it's random that we just trade up inside of this wick, which is a ghost pool, go up to the midway point of that wick, and then reject? No, it's not. It's not random at all. So now we're just consolidating sideways. And where's the orders? Below old lows, above old highs. You got to be aware of the inefficiencies, ghost pools, etc. So right now, my narrative is bearish. Also, take account for this ghost pool as well, the discount ghost pool. So this one as well. So right now, they're just holding XLM sideways. It's been very frustrating for XLM. So stick with it if you're invested in this, but it's not, it's just stuck right now. They're not doing much. Look at it for the last 3 months. 1, 2, 3. Price has just been closing sideways. So that's a consolidation. And if you zoom out to the 3 month time frame, which every one of these candles take 3 months. We got 29 days left. It didn't do nothing in the second quarter of the year. So it went up, went down, and sideways trading so far. So that's a indecisive candle, not showing a willingness to go higher or lower. So that's XLM. Be patient. It's not at a discount right now. It's just consolidating. It's not at a discount. I wouldn't be trying to buy it right now because the possibility of it coming lower or going higher. It's like 50-50 right now with XLM. It's 50-50. Flip a coin, either can go higher or lower. It needs institutional sponsorship. So they need some type of institutional liquidity injection to push it. Institutions not in it right now. They're in it, but they're not moving it. So let's look at XDC. XDC currently trading back down to discount, back down to this 3-month fair value gap. It was at a premium earlier this quarter. Like this candle right here was green. It looked like it wanted to break out, but no. We traded up into this wick right here, not random, rejected it, and back down to the void or the inefficiency, which is a fair value gap in a form of a BISI. Now is the time to pull the trigger. If it was me, I would be pulling the trigger at discount, scooping up more XDC because we want precision. We want to trade at these specific levels. So I will be pulling the trigger right now. It's inside of the gap. Perfect opportunity. Discount. H-bar trading sideways. Let's zoom out to the 3-month. Go out to the 3-month time frame. It recently traded down here. So this candle was black a few days ago, I believe. Earlier last week sometime, it was black. They offered you another opportunity to accumulate H-bar. And now it's not quite at a discount. I mean, y'all might call it a discount, but for me, I want more precision. I like accuracy. I like precision. So there's a possibility. So if you just zoom in and want to get a closer look, what side of the market do y'all see it dropping down to or going to? Do y'all see it going down, take out last month's low? Or do you come up? Do you see it coming up, taking out last month's high? I'm gonna let y'all be the judge. Me personally, I say it comes down, attacks the sell side liquidity from last month. That's at minimum, because price is always gonna want to seek liquidity like a magnet. It's always gonna want to pull to it. It's always gonna want to reach for it. So I'm anticipating coming down, dropping down into that, offering another opportunity. Look at the wick, and then look at the higher time frame fair value gap. And then one last market, I guess I'll look at ZBEC for y'all, and then I'm gonna head up out of here. Let's look at ZBEC, still pumping hard. I was wrong about ZBEC. So last live stream I looked at, I changed my narrative. I was bearish on it, but then I adjusted. You can get it wrong. It's okay to be wrong as an analyst. I'm not up here trying to prove that I'm right all the time. I'm not right all the time, and I'm 100% transparent about that. So all you can do is get in sync with it as a analyst, as a trader. It's still pumping very hard. Last time I left off with y'all, I highlighted this wick right here. See this wick? This is the discount ghost pool. I took this Fibonacci from the closing price of that candle down to the low, and I said, hey, this can be used as support. And guess what? It dropped down there to a discount into these specific levels, used it 1-2 days, boom, expansion higher. Now I'm anticipating ZBEC to continue higher sometime this week, continue higher, break out all-time highs. If you're looking to invest in this, I wouldn't be investing in this because it's at a premium. We don't buy at premiums. You missed it. Be okay with missing it. As this is moving away, we already know that, okay, the more important assets, the one that has more value, are potentially about to drop down the discount. So look at XRP over here. We're anticipating it to come back down lower. XLM going lower. XDC currently at a discount. So if you mix ZBEC, why not come back and play with or a more reliable network, an ISO compliant cryptocurrency like XDC, and accumulate a shit ton of this asset if you miss something that's running? It don't bother me that ZBEC is going higher. I'm not bothered by that. Some people are bothered by that. But right now, looking very strong. Still bullish. Stick with the trend. So that's ZBEC. But other than that, man, I appreciate y'all joining. Make sure y'all smash that like button for me. Subscribe to the channel. If y'all want to learn how to trade, come over here and sign up to the Patreon. Sign up to the Patreon. Get y'all get the BOSSVISION classes. Get the beginner lessons and be looking out for the signal services that are coming. So, or you could just be a part of the community. If you want to just be a part of the community, come in there, chat. You know, I'm trying to grow the community. Y'all can do that as well. But other than that, man, I appreciate y'all joining on this Sunday. Y'all enjoy y'all week. We will touch bases. And y'all stay ready. If you stay ready, you ain't got to get ready. Until the next time, peace out.